The benefits of rental properties for passive income. Welcome to FinancialFlow, the channel that makes your financial dreams come true. The benefits of rental properties for passive income are multifaceted and compelling. Beyond the potential for steady cash flow, they offer advantages such as asset appreciation, tax benefits, and leverage opportunities. Additionally, rental properties facilitate portfolio diversification, act as a hedge against inflation, and provide control over investments. These advantages make them a favored choice among investors looking to secure financial stability, build wealth, and achieve long-term financial goals through a passive income stream. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Number 10. Legacy building. Legacy building is one of the profound benefits of investing in rental properties for passive income. Beyond the immediate financial gains, rental properties can serve as a lasting legacy for future generations. As property values appreciate over time, the wealth you accumulate can be passed down to heirs, providing them with a secure financial foundation. Additionally, the knowledge and expertise gained from managing rental properties can be transferred to the next generation, empowering them with the tools to continue and expand the family's real estate investments. This legacy not only ensures financial security, but also fosters a tradition of wealth building that endures through time. Number 9. Retirement income. Rental properties offer a compelling avenue for securing retirement income. The consistent rental payments from tenants provide a dependable cash flow during retirement, helping cover living expenses and ensuring financial security. Furthermore, rental income tends to increase over time due to rent adjustments, effectively serving as a hedge against inflation. Property appreciation bolsters the value of your real estate assets, which can be leveraged or sold to supplement retirement savings. This combination of rental income, property appreciation, and potential tax advantages positions rental properties as a reliable source of retirement income, affording individuals the opportunity to enjoy their golden years without financial worries. Number 8. Control over investment. Investing in rental properties for passive income provides a unique advantage: control over your investment. Unlike many other passive income streams, rental properties give you direct influence over your asset. You can make decisions about property management, tenant selection, rent adjustments, and property improvements. This control allows you to adapt to changing market conditions, optimize cash flow, and protect your investment. It's a hands-on approach to passive income that empowers you to shape the destiny of your real estate portfolio, ensuring that it aligns with your financial goals and remains a lucrative source of income over the long term. Number 7. Long-term wealth. Rental properties offer a compelling path to long-term wealth accumulation. Beyond their immediate income-generating potential, these assets appreciate in value over time, enhancing your net worth. The combination of rental income, property appreciation, and potential tax benefits positions rental properties as a reliable wealth-building tool. By strategically acquiring and managing properties, investors can create a diversified portfolio that steadily grows in value. This long-term wealth creation isn't just for personal financial security. It can also be a legacy for future generations. Rental properties exemplify the concept of buy and hold, providing a path to financial independence and lasting prosperity. Number 6. Inflation hedge. Rental properties serve as a potent hedge against inflation, a unique benefit among passive income sources. As the general price level rises over time, rental income tends to increase as well. Lease agreements often include rent adjustments, allowing landlords to keep pace with inflation. Additionally, property values typically appreciate during inflationary periods, preserving and potentially increasing your investment's real value. This inherent protection against the eroding effects of inflation makes rental properties a robust choice for long-term passive income. They not only provide financial stability, but also ensure that your purchasing power remains intact, securing your wealth against the corrosive forces of rising prices. Number 5. Portfolio diversification. Rental properties offer a valuable opportunity for portfolio diversification, a crucial aspect of any sound investment strategy. By adding real estate to your investment mix, you reduce the overall risk of your portfolio. Unlike stocks or bonds, real estate often follows a different market cycle, meaning it can perform well even when other asset classes are struggling. This diversification spreads risk and enhances the stability of your overall investment portfolio. Rental properties, with their potential for consistent passive income and property appreciation, provide an additional layer of stability and income generation, making them a smart choice for those looking to create a well-rounded and resilient investment portfolio. Number 4. Tax advantages. Rental properties offer an array of compelling tax advantages, making them an attractive choice for passive income. These benefits include deductions for mortgage interest, property taxes, insurance, and maintenance expenses, which can significantly reduce your taxable income. Moreover, rental properties benefit from depreciation deductions, allowing you to write off the property's value over time, further lowering your tax liability. Additionally, 1031 exchanges enable tax-deferred property swaps, deferring capital gains taxes. These tax advantages not only enhance your passive income, but also create an efficient and tax-optimized investment strategy, allowing you to keep more of your rental income and build wealth more effectively over the long term. Number 3. Leverage opportunities. Rental properties offer enticing leverage opportunities, a key advantage for passive income investors. With real estate, you can use borrowed funds, typically in the form of a mortgage, to finance property acquisitions. This leverage multiplies your potential returns because you're controlling a more valuable asset with a relatively smaller initial investment. As property values appreciate over time, your return on investment, ROI, increases, often surpassing what you'd achieve with all-cash purchases. While leverage amplifies gains, it's essential to manage it prudently to mitigate risks. Nevertheless, when employed wisely, leveraging rental properties can be a potent strategy for accelerating wealth building and generating substantial passive income. Number 2. Asset appreciation. Asset appreciation is a significant advantage of rental properties for passive income investors. Over time, real estate properties tend to increase in value, which can substantially boost your overall return on investment. This appreciation occurs due to factors like inflation, market demand, and property improvements. As property values rise, your net worth grows, making rental properties not only a source of consistent income, but also a reliable long-term wealth-building tool. This capital appreciation, coupled with ongoing rental income, positions rental properties as a dynamic and resilient asset class, providing financial security and the potential for substantial wealth accumulation over the years. Number 1. Steady cash flow. Steady cash flow is one of the most compelling advantages of rental properties for passive income. Unlike other investments, rental properties provide a reliable and consistent stream of income in the form of monthly rent payments from tenants. This predictable income stream can cover property expenses, mortgage payments, and still leave you with a surplus. It offers financial stability, allowing you to plan for your future with confidence. Rental properties enable you to receive a regular paycheck without the need for active daily involvement, making them an ideal choice for those seeking a dependable source of passive income to meet both short-term needs and long-term financial goals. This is it for today's video.